As I said, the topic for today is going to be how to trade market structure. It's going to be very basic, talking about new highs, new lows, pullbacks, what are local highs, local lows, overall trends, etc. Um, I'm going to be going over a few techniques that I use in my trading, and just basically what the kind of overall definition of market structure really is. But all right, so the standards of market structure are finding your trend, right? So you want to be able to look at a chart and quickly identify, are we in an uptrend? Are we in a downtrend? Are we sideways? Like, where are our important levels, right? So if I took a look at this chart, this is a Bitcoin daily. It's very easy to say that we're in an uptrend, we're kind of sideways, and we're in a downtrend, right? So what is it that makes it an uptrend? What is it that makes it a sideways trend? What is it that makes it a downtrend? Now that's what I'm going to be going over. So if we start from all the way down at the bottom, let's just say like this is the origin of this move, right? Okay, so first things first, we need to grab like our local level. We need to grab our local low. So if this is the lowest point, we can grab our local low, right? So you can take the bodies, you can take the wicks. Typically, as I've said many times on stream, most of the time I'll take the bodies. For nearly all of my trading techniques, I take bodies. I feel bodies are just better identifiers of price. Because a body can mean that the price traded there for a long time. Wicks are typically when price traded in that range for a very small amount of time. It could be only one trade. But okay, so I'm just going to take the bodies. So I'm going to take the body here. This is going to become our low. So this becomes our low of our trend. Now, we can look at previous price action and we can see that price was on a massive downtrend here. You were seeing constant lows being broken. You have a low there, broken. A low here, broken. And then you have an SR flip of that low into a new low. Okay? So basic market structure tells you that this is an impulse move down because you have constant breaks of your lows. So this is your final low, but let's look at the previous lows. You have a low here where it tries to find support. Now you can identify lows as like one candle bounces or multiple candle bounces. Typically I look for like fractals. So I look for when you have multiple candles kind of forming that bottom or that top. So like right here, we have like 3 candles that kind of give you that support. And then we break that support into a new low because you have, once again, about 3 or 4 candles that try to find support. So that gives you another low. And then you see another break of that low into the same thing. You see another low forming here. You have 1, 2, 3 candles giving you a buy support. Now, typically when you're looking for lows and highs, you want it to be multiple candles of how do I say this? Like differing candles. So you want to see green candles, you want to see red candles. You don't want them all to be red or all be green. In my case, it's black and white, but it's the same thing, red and green. So if you see the green candles come in on a red move down, that tells you that you had some buyers come in. You had some support, right? So for lows, you need some buyers to step in to give you that support. For highs, you need some sellers to step in to give you that high, right? That's the basic understanding of price. So for right here, we have the buyers step in that give us that low. And then the buyers lose. And the sellers step in. And then what happens? Then the buyers step in again and they give us that low. And then we push back up. But then look here. Basic market structure, basic price action tells you that once a low is broken, once a support is broken, it becomes resistance, correct? So if we have a low here that is now broken, when price is pulling back, that is no longer a support. This has become a resistance. This has also become a resistance. And this has also become a resistance. This is still a support for now. So we bounce up, it gives you that high, and that becomes a resistance and pushes down. But then look what happens here. You have a slight support come in. You try to bounce off that low, but then you break again. So once again, basic market structure tells you that once a support is broken, it becomes resistance. So now this is resistance. So we're just going to continue downward. And we continue all the way down until we finally hit that absolute bottom. So you also have a low right here where you try to find some buyers. That is broken, turns into resistance. Then we have another low, and we see a very strong engulfing candle come in that creates that low. This one is not broken again. This becomes support and it stays support. So now we're flipping. We can go through and flip our levels. Now we've become support again. This has also become support again. This is still resistance. So look at this low here. This low started as support, acted as resistance, and then once again acted as resistance. So until that level is broken, that is kind of your bear line. That is where your bears are going to continue to step in and push price lower until that level acts as support. So let's keep going. And you can keep drawing these levels and keep taking newer levels. So if we wanted to, we could delete these older levels and we could create some new ones. So once these have kind of been flipped, if they seem like price is not respecting them anymore, you can delete them. But if we look at these levels, they are still being respected. You have lows there, you have highs there, you have lows here. Once again, you have highs there. So I wouldn't delete these levels. I would keep these levels. So moving forward, we can see this broke, became resistance. And you can see that failure there. It gave you a nice little short. Price failed downward. And look where we bounced. We bounced right off that previous support on that previous swing low. So this still is acting as support. So we're going to move forward. Okay, so actually, before I move forward, let's talk about lower lows and higher lows, stuff like that. So we have a flip here, right? We have this support turn into resistance and then turn back into support, correct? But when this acts as support, again, is this giving you a higher low? Is this giving you a lower low? What is the overall trend of that low? So if we look at the very local price action, this is giving you a lower low, correct? So in your local price action, this is still a downtrend because this low is still lower than your previous lows. This is where a lot of people get confused. A lot of people, they think that this low is extremely bearish because they're not identifying the overall trend. Now, in the local trend, that move is pretty bearish. You are forming a new low. But in your overall trend, you are still at a higher price than you were during this low. So 33.60 is still a higher fair price than 31.70. So that is still telling you that if buyers are stepping in here, they are willing to pay a higher price than here. What does that tell you when buyers are willing to pay a higher price? That tells you that price is most likely going to rise. So in your local trend, you have a downtrend, you have a bearish low. But in your overall trend, you have a higher low. That is very important to understand. Where is your overall trend and where is your local trend? So your overall trend is placing a higher low. Your local trend is placing a lower low. But then look at what happens. We bounce off that support and we put in a higher low for your local trend. So now not only does your overall trend have a higher low, your local trend also has a higher low. So now what is this telling you? This is telling you that the overall trend is shifting up and the local trend is shifting up. So if you were a buyer here, if you were waiting to buy Bitcoin, that would be a very good opportunity to start looking to buy. So you could have bought here and you see a massive run up to around 4,200. You see that buy up because of what I said. You see the local trend, the local market structure where you see your lows and your highs is breaking to the upside while you're maintaining your overall trend. Okay? So let's keep going. You see that previous resistance, you acted as resistance, pulled back, and then broke. So now this becomes support. And then look at what we see here. We see a beautiful SR flip of that resistance. This is by far probably the best level during this entire range. Because you see the support there, support here, resistance broken, support, kind of a support, a little choppy, broken, resistance, resistance, resistance all the way through, and then support. And then you finally break out of that range. So I'd say this is the most important level of the entire beginning of 2019, is that 3,700 level. So we see that resistance turn support. We see a higher high of your local trend, but then you pull back. But still, look at this. Your local trend is forming higher lows. So you have a low, another low, another low, giving you higher lows of the entire local trend. And if we zoom out, what is our overall trend doing? And what I mean by local and overall is just the longer time. Like the overall trend has more candles inside of it than the local trend. Local trend is just like the recent price action. The overall trend is the price action that's been happening for a much longer period of time. So if we see the overall trend is continuing, and this is making a much higher low, this is creating what I call a fork. And we could talk about forks as well. It kind of relates to market structure. So let me delete some of these levels and clean this up. So let's just keep that one level that I mentioned, 37. And let's draw our trend lines here. So this is the basic understanding of trend lines, is lower lows, higher lows, etc. So our overall trend is still continuing that uptrend, correct? We have the higher lows. Your local trend tried to continue its uptrend here, but then it broke. But you still found support on that same level, that 3,700 level. So you're still in a bullish structure. So let's get rid of this trend line here. We can actually draw our trend line off something like this. And this gives you what I call a fork. So if you have, let's say, okay, so if you have an uptrend here, so let's say you have a price trending like this, and then you pop up, and then you start a new trend, this gives you a bullish fork. you are forking off of your initial trend and creating a more bullish trend. And you can see this on bearish structure as well. Is a lower low that is lower than a higher low, but higher than the original low? I'm not sure what you're asking. A lower low just means that if we're on a downtrend here, this is a lower low. But let's say price made a low way back here. This is still a lower low, but in your overall trend, if you're taking the entire move, that is a higher low. So that's what I mean by overall trend and local trend. So this is still a lower low, but it's a higher low if you're looking at a longer time frame. So yeah, a bullish fork is when you're forking off of your initial trend line. So here's your initial trend line. And now you are forking off of your initial trend line, creating a more bullish trend. That is a bullish fork. You also have these on bearish trends too, when you have like a downtrend. And then you create a weaker downtrend. You are forking off of that initial trend. Okay, so let's go back. I'm getting a little off topic. So we have our local trend here. You're forming highs, but then you get nuked on this candle here. So you break your higher high, higher low structure. So you see this kind of bullish channel here. You break your bullish channel, and then you go into a sideways structure. Sideways structures are very clear because you're not creating a new high, you're not creating a new low. So like if we were to take our high here, you could keep that low there. We can see that we're sideways because you're not creating a new high, you're not creating a new low. But then what do we start to see? During this sideways structure, we're clearly seeing higher lows. We're clearly seeing an increase in price. That should have told you that the buyers are stronger here. So the buyers are pushing the price up. Even though you're in a range, you are still trending upward in that range. So once that range is broken, let's start. I'm going to start doing this a little faster now because you guys probably understand the basics. So once this trend is broken, we have the sideways trend broken. So if we were looking at this overall trend, so I showed you a lot of the local levels. Let's look at the overall trend here. So if we're looking at all of this, you're basically ranging between these two levels. You have this low and you have this high. Every price action in between those two levels is kind of a range. But what do we see during this range? We saw exactly what we saw during this range here. You see an increase in price. Because look at here, you see an increase in price. So this local trend here is the same as this overall trend here. Market structure continuously repeats itself. All right, so let's move forward. Okay, so now we have an uptrend, right? We can see our high was made, and we started to fail. We started to break our high here, but then we failed downward, which turned it into resistance. But then look at what we did here. We broke through, we pulled back, we were not able to retest. So once again, it acts as support. And then you could also have grabbed your higher high here, and then look at what you saw there. So you put in a high. You put in a high here. You started to fail, pulled back. Resistance, resistance, resistance on like, what, 6 candles. You broke through. It became a failure. Put in a new high. So here's a new high because you're breaking this high. You see how these candles are higher than these candles? That is just a basic higher high. And once again, you have that fractal where you have high candle, low, 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 low. That gives you that fractal. Highest candle is in the middle. And you have two lower candles on each side. That gives you that high. Now, if you struggle seeing those fractals, there is a built-in indicator in TradingView called fractals. If you type in Bill Williams, it's right. You can just go to built-ins. It's in here. Williams fractal. And it will mark your fractals here. It just gets a little messy. That's why I don't use the indicator. Okay, so we have a higher high here, right? Push low, pop. We have a new higher high. So now our local trend is continuing up. You also have a slight higher low here, almost a double bottom. But then look at here, you pull back from that higher high. And what did we tell you earlier? Support broken is resistance. Resistance broken is support, correct? So you see that resistance turn into support. So this is a big fallacy that a lot of traders make if you don't understand market structure. And some of you guys probably did this actually. So if you saw this high here and you saw that it started to fail, you're like, oh, this looks like a good short and I could short this. But if you were paying attention to your basic market structure here, you would not have shorted this. Because why are you shorting an SR flip? Why are you shorting a support? This is what people talk about when they say shorting a support or like longing a resistance. Because this is a resistance turned support and now you're going to short that? Like what are you looking for? You're looking for a failure? So if you understand basic market structure, you can avoid taking trades like this, where you want to short this high. Because you shouldn't be shorting when you have a support right below you. Now, if you break that support and you start to use it as resistance, then there you go. There's your short. So if you trade market structure, it will help you be a more patient trader. But okay, let's move forward. Let me fix my chart here. Okay, so we have our new high here. Turns into a support. What was that? Hey, Ninja, I appreciate the resub for 6 months. Appreciate that, man. With the Amazon Prime. Thanks a lot, man. Welcome back. All right, back to the video here. We see a new high form. SR flip. This is your trigger. When I say trigger, that's what I mean. That's like the moment that you should be entering your trade. That's like the final decision that should push you to enter the trade. So you have a trigger here, and then you have your pop off, right? Now, a lot of you guys, obviously this is hindsight. So if you guys are just stepping in, clearly this is hindsight. But you can use these techniques in your live trading, and I guarantee you it will help your trading. But okay, so we see that SR flip. You pop up into a new high. Let's delete our old levels to keep this clean. Bitcoin makes this very easy, obviously, because this trend is extremely, extremely strong. So we see our high here. Depending on what low you want to take, it doesn't really matter. You could take these lows here. You could take these lows here. You could even take this low if you really wanted to. It's not a very strong low, though. So there's your high, there's your low, or you could take these. You created your high here. You pulled back. You were not able to make a lower low. So you never started a downtrend here. This is another mistake a lot of traders make. So you see this strong sell-off here, which is a pretty strong sell-off. It's a, let's see, about a 22% to 13% sell-off, which is very, very strong, especially on a daily. They assume that because that sell-off was so strong that we're going to start into a downtrend. But if you're trading basic market structure, you know that you're not in a downtrend until you have two things. Until you have a lower high, until you have a lower low. Okay? So what do we see here? We see not a lower high, but a double top, which is basically the same thing as a lower high. It's bearish. But what do we see once that double top pulls back? We see a higher low. So once again, this is a clear mistake that people make. They want to short this double top, and they want to see this turn into a downtrend. They're trying to be proactive. They're trying to predict the market. Predicting the market can make you a lot of money, but it's also going to lose you a lot of money. Being reactive is much safer. So if you tried to predict that this double top would turn into a downtrend, you lost that trade. Because what did we see here? Nothing but higher lows. So once you form the higher low here, look at what happens. You break your resistance. It turns into support. Then you try to push higher, but then what do we see? We see the same thing again. Let's clean this up. We see another double top. Okay. So now yet again, once you see this top here, it's confirmed on this candle. What creates a downtrend? A lower high and a lower low. Okay. A double top is basically the same as a lower high, as I said before. So you have your lower high. Do we have our lower low? Now this one is a hard trade. So this one I wouldn't beat yourself up if you actually traded this and you lost this trade. This is a lot harder. Because what do we see here? If you're looking at your local trend, yes, you do have a lower low. You have a lower high, you have a lower low. So this could have easily turned into a downtrend. But if you look at the overall market, try to find your strong support here. And when you're looking at your overall market, you want to do one easy thing. You want to zoom out. Now, when you're looking at your local trend, zoom in. Very clear. You want to look at your short-term price action. When you're looking at your overall market, you want to zoom out. Okay, so what do we see here? We see a clear uptrend, which is broken, which is another reason why I wouldn't beat yourself up if you lost this trade. You see a clear uptrend, which is broken, but find your overall support. Find your overall trend here. And I'll give you guys a few seconds to kind of see if you can visualize it yourself. Now, if I were to take an overall level, you guys know me. I like taking dojis. I like taking dojis before impulse moves. Impulse moves. So here's the level that I would have taken. I would have taken that doji. You could take the high. You could take the low. Now let me delete the trend. That is the support that I would have taken. And if you guys don't believe me, feel free to watch my other videos. I've talked about this many times before. These are the levels that I take. I take doji levels. So if that is my low that I'm taking to determine the overall trend, this is not a downtrend. This is a range. So if you shorted here, you could have made a slight profit, but you got faked out by this trend break that we saw here. Not the cleanest trade, or cleanest trend, but it's still a pretty bullish trend. So you broke your uptrend. You did not enter a downtrend. You entered a range. So not every uptrend is going to break into a downtrend, and not every downtrend is going to break into an uptrend. You can easily break into a distribution or an accumulation. We just went over this yesterday on our part 2 video. We also went over this almost a year ago on my accumulation distribution part 1. So if you guys haven't already, go back and watch those videos, because uptrends and downtrends don't always have to flip. they can change into ranging markets, which is what we see here. You have that uptrend change into a ranging market. So if you shorted here looking for that downtrend, you would have lost that trade. Okay, so let's move on. We see our low. It acts as support. So you are not in a downtrend. Is this bearish? Slightly, yes, it's slightly bearish. You see a massive sell-off, but are you in a downtrend? No. Basic market structure tells you that you are in a range. You do not see a lower low. You might see a local double top, but you do not see a lower low. Now, for this to enter a downtrend, you would have needed to see a low below these levels. So if price came down and kind of did something like this, then that would be a downtrend. But okay, so now we see a double bottom. We see a range. We start to see price rise. Once you break that resistance, you are now you've turned that resistance into a support. So now you are bullish. Another mistake people make is they're trying to predict swing failures. They're trying to predict fakeouts, right? Because you see fakeouts all the time on Bitcoin. So people are always trying to predict them instead of waiting to see if they actually play out. So what did a lot of traders probably do? A lot of traders probably sold as soon as they saw that red candle. You see the break of resistance, and then you instantly see a red candle. So people are probably like, oh, it's Bitcoin, man. It's going to fake out. It's going to go right back into the range. They probably sold there, and then guess what? They got destroyed. Because basic structure tells you, once you break resistance, it's support. Why are you shorting a support? The only reason you're shorting a support is because you're getting greedy. You're trying to predict an overall trend shift. Instead of waiting for the trend to shift, you're trying to predict it, because if you predict it, you'll make more money. But guess what? You just lost your money. So now you have to predict multiple trends to make back the money that you just lost. But okay, let's move forward. So just continuing up, massive move up, really strong uptrend. Okay, now we have another high, right? So we have a high here. We pull back into a low. So we could grab our low. And then what do? We push back up. What happens? Resistance stays resistance. So we have a double top, which or it's even a lower high. But even if you consider this a double top, like I said earlier, double tops are pretty much the same as a lower high. So we have our double top or a lower high, depending on how you look at it. So that is the first thing we want to look for if we're shifting from an uptrend into a downtrend or into a range. A downtrend needs two things. It needs a lower high and a lower low. So we see our lower high. What do we see next? We see our lower low, right? So our local trend is entering a downtrend. We have the two things we need. We have a lower high and we have a lower low. But what is your overall trend doing? Zoom out. Like I said, every time you're looking for your overall trend, zoom out. Overall trend. What are we doing? Continuing our pattern of higher low, higher high. Right? But what does our overall trend do? Our overall trend fails to make a higher high. So if you're looking at your overall trend here, the entire market, not only is your local price action turning into a downtrend, but your overall trend is turning into a downtrend. So what do you need for a downtrend? Lower high, lower low, okay? So our overall market now has our lower high. Here's your first high. Here's your second high. It is lower than your previous high. Okay, so now what do we look for? Now we need to look for a lower low. We don't have it here. This creates a range. You have your overall high, your overall lows, creating a range. But then what do we see? We see a descending triangle into a breakdown into a new low. So now what is our overall market doing? So let's zoom out. Let's just look at our overall market. Let's not worry about local price action. So our overall market has a high here. We have a low here, which acts as a beautiful SR flip from this previous level. And then if you want to mark your previous lows just to look at your market structure here, you can. And then we have our lower high. I'm going to color code these so it's easier to see. Another lower high. And another lower high. So what is our overall market doing now? I would say our overall market's in a downtrend. Because you have broken your higher low structure. You have broken your higher high structure. Here's your lower high. Here's your lower low. Now, until otherwise, you are in a downtrend. On basic market structure, it tells you you are in a downtrend. Does that mean we're in a bear market, like a lot of people would want you to believe? It doesn't exactly mean you're in a bear market, but you are in a downtrend. So until we make a higher high above 8,600, or until we make a higher low above 9,400, which is basically the same thing. The higher high and higher low are going to be made basically at the same time. Until that happens, you are in a downtrend. So here's your local low. Here is your lower low. Here's your local high. Here's your lower high. So until that structure is broken, which we could see like this, so here's your high, here's your low. You can consider it both. Until we pop up and create that new high, or until we pop up and create that new low, you are in a downtrend. What would you call for a bear market then as this downtrend? So if I was calling for a bear market, I would look at a longer time frame. I'd look at like a weekly. So if we're looking at a weekly, you can see this is a massive uptrend into a pullback. So as long as this weekly, this is a weekly obviously, this is a lot of time. So as long as the next major move up on the weekly is able to break this high, we are still in a bull market. Now, if this next low breaks, let's say, so let me find my levels here. So the levels that I'd be watching, you have this doji here. You also have this doji here. Now, if I want to grab some older levels, you can grab like this doji here. I think those are all the levels that I need. You could also take this doji here. So, okay, you have your resistance, you have your support. So let's look at our support. So as long as this next sell-off kind of stays above this level here, I would say we're still in a bull market. If that next high can break above this like 9,000 range. Right now, I would not consider we're in like the strongest of bull markets. We're kind of entering like a distribution. We're entering a range. So we're definitely entering a phase of which the bull market is not extremely bullish. But if I if I were to say, like, are we in a bull market or a bear market? If I had to pick one, I'd say we're more bullish than bearish. But like I said, we're in a distribution. So distribution is more bearish than it is bullish. So if you guys watched my video yesterday, what did we just talk about? We talked about distribution, where if you have an impulse move up and then you have that kind of sell off, that range, you are entering a distribution. So we see our impulse move up, we see our distribution, and now we're in a continuation phase to the downside. So we are definitely entering a more bearish market than bullish. But I would say we're just not there yet. We're still bullish. So if your next low finds support here, or your next high breaks this resistance, you're still really bullish and you're still good to go. Now, what would scare you for the overall market structure is if we start to double top here. So look at this on the weekly. Look at this price action here. Now compare this. Let me delete these levels. Compare this price action to what we just witnessed on the daily. Look at this here. Right? Now look at this on a weekly. What do you guys see? We see a massive impulse up into a lower high. We see that sell off. We try to find support, but then we create a lower high and we nuke. Okay, so let's compare that to the weekly. We see a massive impulse up. Let's consider this entire move your first high. And now what are we seeing? We're seeing our sell off. So now if we push up and we double top or we put in a lower high, that is when you will be entering a bear market. So I'll denote these with numbers to make it easier to see. So look at this. We see your move up. Let's say this is number one. This is your first high. Let's say this is number two. This is your second high. Let's say this is your sell-off. So you have your impulse move up, you have your first high, second high, and you have your sell-off, right? Okay, so I'm going to I'm going to screenshot this, if I can press the right button. Let's save this. Okay. Now let's go to the weekly. We see our impulse move up. We see our first high. We're going to consider this entire thing our first high. So what do we not have yet? We don't have that lower high. So if this pops up here, and then we see our lower high, let's just say that let's just say like it's there. That will become your lower high. Then what are we going to see? Then your sell-off comes. This is your bear market. This is not a bear market. This is your bear market. Now, obviously, if we start to just completely nuke downward, then that would be your bear market. But I don't anticipate us just nuking back down to 5K. So compare this to this. Does that make sense? Okay, so I think I've gone over just about everything that I wanted to go over. let me go back to a daily here. What are some other things I can go over here? So another major thing with like market structure, I can tie this into a technique that I talked about a little bit yesterday, I believe, is a first pullback, right? So if you see, and I think I have a screenshot of this. Let me check my screenshots. Yeah, here we go. So if you see that first kind of pullback into your trend shift or out of your trend shift, that could give you a very good trading opportunity. So you have this clear downtrend, right? You have your market structure happening. You have your lower highs, lower lows. You're in a complete downtrend. You see your point of origin, which acts as that breakout point. And then what do you see here? You see that break of the downtrend. You flip up into an uptrend because you see that higher low and your local higher high. So your local trend is entering an uptrend. When you see that first pullback into that higher low, once that higher low stays above that previous trend, that previous downtrend, that could give you a very good indication that the trend is shifting to the upside. So you have the break of the downtrend, your higher low stays above your previous trend, and then you start to push up. That gives you a very good indication that price is flipping to the upside. And you can see that on an uptrend as well. So let me see if I can find an example for an uptrend. We probably have one here. This trend is just not very clean, is the problem. It's a very sloppy trend. So it'd be kind of like, this isn't the cleanest, like I said, but it would be kind of like this, where you have this lower high here. You stay below that previous uptrend. So you have your uptrend. You have your higher low, higher low. You could even almost consider that a higher low, but not very clean. And then you have your lower high, lower high, lower high. So that's your downtrend. So when you pull back, where is it? Here. And you find resistance, you could have either shorted this move or this move. It's not the cleanest, but where's my screenshot? It's the basically the same thing as this. Downtrend, break of trend, higher low that stays above the trend. So this would be break of trend, lower high that stays below the trend. So you have your lower high that stays below the uptrend. So you could have shorted basically anything here. Which if you think that's hindsight, we did short this. And I told everybody on stream for like weeks that shorting this was the right play. So this is not hindsight. Another thing are first pullbacks. So let's see. Okay, like here. So if you have a massive downtrend or a massive range, let's just say this is a range. Once you break structure, so once you're going from an uptrend to a downtrend, or an uptrend to a range, or a downtrend to an uptrend, downtrend to a range, once you break that structure, you have your impulse, right? So you have the break of the range into an impulse. So after that impulse, what usually happens? You usually have what I call a first pullback. And what a lot of people probably call a first pullback. You have that first kind of distribution or accumulation, depending on which way the impulse is. So this is an impulse up. So we see that first pullback has distribution. A very good trade is if that distribution breaks to the upside, that can give you a very good buying opportunity. It's called a continuation phase. We talked about this in yesterday's video. Same thing is if you have a downtrend. Actually, I can show you. So we have a downtrend, which turns into accumulation. Now, once we break out of that accumulation, you have that first pullback, which is the same as that distribution there. So this move here, you could have had two buying opportunities. You had the breakout here, which acted as distribution, and you also had the break of this entire accumulation here. Gave you two great triggers. And if you guys don't understand what I'm talking about, go back and watch yesterday's video or the first accumulation distribution video. It will all make sense. But that's basically it, guys. I don't really have any more to add to this very simple and short video talking about market structure. Like I said, if you guys have been trading for a few years, this is probably boring you to death. You guys already understand this. It's very easy, very simple stuff. Do you guys have any questions? If you guys have any questions in Twitch chat or in Twitch, put them in Twitch chat. If you guys have any questions on YouTube, feel free to put them in the comments and I'll get to them as soon as possible. If you guys don't have any questions, I'm going to go ahead and end the video on that. Appreciate you guys stopping by and watching. I know, like I said, it might have been a little boring, but if you guys take all these videos and take notes or just kind of make mental notes of what I'm saying and kind of implement them in your own trading, I guarantee you it will definitely improve your trading. But all right, guys, thanks for watching. If you guys were watching on Twitch, if you guys haven't already, hit that follow button. If you guys are watching on YouTube and you haven't already, hit that subscribe button. And another thing, guys, if you guys are watching on Twitch, if you guys would do me a huge favor and go on YouTube and hit that like button on the video, I would really appreciate it. But all right, guys, tomorrow we're going to be doing another video, and we're going to be talking about laddering, pyramiding, martingaling, and a few other different kinds of ways to enter and exit trades. So if you guys are having trouble with entering trades or exiting trades, should I be laddering here? Should I be adding on to my losses? Should I be adding on to my winners? We're going to be going over all of that tomorrow. And then maybe Friday we'll have another topic as well, but I haven't come up with a topic for Friday. But all right, guys, I'm going to end the video on that. Appreciate you guys being here, and I will be streaming tomorrow about the same time. Thanks for watching, guys. See you later.